Let's take a quick look at a cash budget. How much cash should a company have? Just enough. Too little cash and you can't pay your bills and you're going to go out of business. Too much cash and you've got it in the bank earning 1/2 of 1%. Well, and hopefully if it were invested in your business, you'd be earning a lot more than 1/2 of 1%. So before the year even starts, we should put together a cash budget. So where does this cash budget fit in? There's a master budget for everything. And so we've got an series of operating budgets up here with a sales budget, production budget. Once we know how many items we're going to produce, we can make budgets for materials, labor, and overhead. Then we can make a budget for SG&A, so we get our budgeted income statement. But we also want to end up with a budgeted balance sheet. So that'll be an early warning system for us as well. If we start to have too much debt during the year compared to our budget, we can correct for it or do something to head off any problems that we see coming. So to figure out what our budgeted balance sheet looks like, we're going to have to figure out how much cash we're going to have. And independent of its function as part of the balance sheet, we want to be sure we have enough cash to keep operating our business. So what does a cash budget look like? It looks complicated at first glance, but it really isn't. We'll start out with our beginning cash balance on the first day of the year, and then we'll book additions, receipts that we're going to get in, minus cash we pay out to give us our cash balance at the end. And this company evidently wants to be sure it always has at least $15,000 cash in the bank. So at the end of this first quarter, they estimate they're going to have $25,550. That's over $15,000, so they don't have to borrow anything. The cash at the end of the first quarter is the cash at the beginning of the second quarter. Same thing, cash in minus cash out. And now it turns out that they predict they'll only have $12,000 cash. So they're going to have to borrow $3,000 to get to their $15,000 desired minimum balance. There's no shame in having to borrow money. What we want to do is we want to know if we're going to have to borrow money in advance so we can start talking to our bank months before so we can get the best deal we can. And then the next quarter, the ending cash here becomes the beginning cash of quarter 3, cash in minus cash out. Now we have enough to repay that loan of $3,000 plus the interest that's due on it. So the theme of the cash budget is beginning cash plus cash in minus cash out gives us ending cash. The ending cash of one quarter or 1 month becomes the beginning cash of the next quarter. And so the tricky part of this is the collections from customers, because unless we're in a cash business, we're not going to collect all our cash at the time of the sale. So let's take a look at that one row in that spreadsheet where we're trying to figure out what our receipts from our customers are going to be. So as I say, if we're not in the cash business, if you're not in the restaurant business or the grocery business, you're not going to get paid on the spot. You're going to send out an invoice. That's an account receivable, and you'll get paid maybe in 30 days, 60, or 90 days. This company starts their business on January 1st. You estimate your sales are going to be $100,000 the first month, and they're going to grow by 5% each month thereafter. You estimate that 5% of your sales are going to be cash sales, so you're going to collect those in that same month. You're also going to collect 30% of your accounts receivable in that same month. But another 30% will be collected the month after, and the following month, the last 30% will be collected. That takes care of 95% of our sales, so for this example, we're going to pretend like 5% of our sales go uncollected. So let's fill out this top row here. Sales are going to increase by 5% every month. So we could multiply 5% times $100,000 and add that to $100,000. Or we could be smart and simply multiply that 100,000 times 1.05. The 1 gets us the 100,000 and the 0.05 gets us the 5%. So we estimate our February sales will be 105,000. Let's do the same thing for March. 105% of $105,000 is $110,250. All right, why don't you pause this video and see if you can figure out what the April sales are going to be. I hope you got it. It's $115,763. All right, so now we know what our estimated sales are for the first 4 months of the year. Each month, we're going to collect 5% of the sales in the form of cash sales. So we're going to take 5% of $105,000, and that will be our cash collections for the month. So these are the customers that pay us right on the spot with their debit card or the cash or a credit card. So we get the money right away. We also estimate that we're going to send out invoices and 30% of our customers are going to pay us right away. So we're going to collect 30% of this $105,000 in the month. And we still have people that owe us money from January. we collect 30% of January sales. 30% of $100,000 is $30,000. So we collect 5% of this month's sales, 30% of this month's sales, 30% of last month's sales. So our total collections for the month of February is $66,750. Please don't make the mistake I always do, which is accidentally add in the total sales. Our cash collections start in this row and go down. All right, let's look at March. We collect 5% of March's sales right away in the form of cash. We also send out invoices and get paid right away on 30% of March's sales. 30% of $110,250 is $33,075. We also collect 30% of February sales. 30% of $105,000 is $31,500. And then we finally collect that last 30% of January sales. 30% of $100,000 is $30,000. That last 5% is uncollectible, so our total collections for the month of March are $100,088. All right, why don't you pause this video and see if you can fill out the month of April. I hope you got it. We collect 5% of April's sales right away over the counter. We collect another 30% of April's sales right away because people pay their bills right away. We collect 30% of March's sales, 30% of $110,250. We also collect 30% of February sales, $31,500. That's the last 30% of February sales. We still have that 5% that goes uncollectible, so our total collections for April are $105,092. And so that's how you do one step in the cash budget. That's how you complete the line receipts from customers if you're not a cash business.